Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. We're going to start a little differently today. I've been in this industry for over 15 years. And, I've worked with a lot of grain market advisors who really were bothered by the volatility that can happen in the marketplace or just not knowing what's going to happen and which direction the market's going to go and all those kind of things that surround volatility. But myself, and maybe this is just my own ADHD brain, but part of the appeal of this job of being a market analyst or a grain marketing advisor or just working in the ag market space is that tomorrow will always be different. And I always embraced that thought, got me out of bed a lot of mornings, just not knowing what the market was going to bear and, what kind of excitement was going to happen in the marketplace and what kinds of actions that you'd have to take in the marketplace as a result. But I always kind of embraced that tomorrow's going to be different. The market is unpredictable at times, most of the time. And, we just go to work and do what we have to do to get the job done. And I think that is a similar, mindset to just farming in general. You don't know if it's going to rain. You don't know if it's going to be a drought. You put millions of dollars of seed and inputs in the ground and just, kind of hope things go your way. So I think that's what I like about this job. And today is kind of one of those days where the things that happened yesterday are totally different today. So let's run through what the market did today, and then we'll get into some other fun stuff. So canola was up today after being down over $20 a ton yesterday, up $11.90 to close at 698.70. Minneapolis wheat again was up yesterday, down 9.25 today at 618. Kansas wheat down 3 at 536 and 3/4. Chicago wheat down 3 as well at 536. We saw soybeans up to 1040 and 3/4, up 7.25 today. Corn is down or up marginally a quarter of a cent at 438.50. Canadian dollar was relatively unchanged today, 72.88. Live cattle saw a little bit of a decline, 215.97 is where that is today, and feeder cattle down as well at 301.23, still holding above $3 a pound there. So let's get into some of the crop ratings. Now, I haven't talked about the Alberta crop ratings from Friday's release until today. I didn't make a video on Friday. Monday just had too many other things to talk about, I think. And so today we'll go through the Alberta crop report. I don't think this is going to surprise a lot of people. We've got, really good planting progress as of the end of the week last week or into the end of the week last week. Spring wheat is 97% planted, barley 88, oats 74, canola 82.5, dry peas 98. As you can see, major crops as of May 27th at 89.8. The 5-year average is 81. So we are getting above average, but we're getting to that point now where it doesn't really matter. We're getting close to, the average, I guess, is catching up with the seeding progress as we get closer to complete. Just to kind of put that into a more graphical standpoint, you can see here the northwest part of the province is the most above average, pieces above average. We're actually getting close in the central and the south region, provincially, of course, above average as well. So overall, the crop has gone in really well in most of the provinces. We do have Saskatchewan's crop report coming out later this week, but here is Manitoba's. Similar story, 95% of the crop is planted in Manitoba as of the first week of June, or into the first week of June here. The average is 69%. So again, Manitoba has a big overperformance in planting at this point. They also stated in the crop report in Manitoba that winter wheat and rye growth is good. Winter wheat is at flag leaf stage or boot stage, and fall rye is in boot to head emergence as well. Spring wheat seeding complete with earliest seeded fields in the 4 to 5 leaf stage as well. Oats and barley sitting at 97% seeded. On the oilseed side, canola seeding is 90% complete across the province. Emerged crops range from the cotyledon to 5-leaf stage. Flax is 75% seeded. Sunflowers are almost 100% seeded. So really good progress in Manitoba as well. If we could just take care of some of these wildfires that we've got burning all across the province, And I know that's not just inclusive to Manitoba, but all across the prairies as well. That'd be really great. The rains, so we got some rains in the eastern part, which might help with some of those whiteshell fires, but I know lots of the fires up north are still raging and getting worse. Moving into the US side, US crop condition ratings increased by 5 percentage points this week, from 45% good to excellent in the US spring wheat to 50% good to excellent. It's probably why we saw some reductions in the spring wheat crop today. As far as a map goes, we saw 11-point increase in North Dakota alone, and and a good increase in Minnesota. Those are good states. Lots of hard spring wheat grown there. Some of the softer spring wheats and things are grown here in the Northwest, Idaho and Montana, and of course a lot of durum grown here in Montana, which actually was the one state that saw reductions to crop ratings in this last report. Winter wheat is a funny graph. We saw an increase here as well, from 48 to 51, I think it was. Um, when you look at this year's crop ratings, it looks like it just kind of jags all over the map. And perhaps I'm dating myself here, but this really reminds me of the Family Circus cartoon where I can't remember which one of the kids it was, track all over the place and make these dotted lines all over the neighborhood. Um, I don't know why I like that cartoon so much, but it was always a good one. So for those of you who are around my age and may remember when cartoons were printed in the newspaper, um, that was a good one. Always look forward to the color cartoons in on Saturday morning. All right, moving on and back out of nostalgia lane. Here is the winter wheat conditions map as well. As you can see, we saw increases in Kansas, which is an important state, um, but also some increases in Colorado, Nebraska, and a lot of the crops in the Northwest, where there's lots of softer winter wheat. It looks good as well. This week was the first week that the USDA reported on soybean crop conditions. That came in at 68% good to excellent. As you can see, that's basically about average. Definitely inside the range. Not as good as last year, maybe, but still relatively okay or benign, I would say. The one thing that you can kind of note on this chart is that it's you could definitely tell that there's early seeding happening. We usually don't see crop condition ratings that come out as early as this one does for soybeans. Here's where the crop condition ratings are good to excellent, and here's where the green on this map is where it's better than 50% good to excellent. We see some really good conditions here in the soybean belt, the northern part of the soybean belt, and at this point, some good conditions in the Delta, where some of the rains over the next couple of days are not going to necessarily work into that region. So it's good that those conditions are already off to a good start, because they might need it if they get a lack of rain in that area. All right, let's get into some pricing charts here. Here is July canola. You can see here that the yesterday's losses actually in the evening session, and we actually saw it punch to a bit lower of a price range here before rallying. So it rallied mostly during the day session. As you can see here, it hasn't rallied back and made back the losses from yesterday. But we still continue with that trend of seeing, only 2 down days in a row before we see an up day in this market, which still kind of leads me to feel like there still is some support in this market, or that when we do see big losses, that there are buyers that step in, likely physical buyers at this point in time. Yesterday, we probably saw an exodus, as we mentioned in yesterday's video, of some fund position, whether that's profit taking or stop loss. Could have been a bit of both. But overall, I think this chart still looks like it does show some risk after breaking heavily below the 20 and making a new low on this chart as well. So we're not out of the woods yet. Fundamentally, canola is still bullish, but a lot of the times the top of the market comes out when the market looks the most bullish. So just want to be cognizant. We have put some sales on for new crop. We've been advocating for some risk management strategies as well. We do communicate those to our premium subscribers. So if you are not a premium subscriber, we would highly recommend you do that by going to canadianagmarkets.com/subscribe and get in on our newsletters and things like that. Moving on to the November canola chart. Again, this chart had been looking a little bit better up until yesterday, and as you can see, we've kind of only broke that 20-day and the trend line yesterday. We rallied back and actually closed above the 20-day moving average. That is a positive on the November. We are also seeing more and more volume move to the November. So I think in the next couple of weeks here, we'll see the bulk of the volume be in November as we near the end of the trading in June for the July contract, and we move into the delivery month there. Yeah, the one thing that, reacting while the market is volatile can be a little bit tricky. Here's a snapshot of puts and calls for the November contract, and what has happened as far as pricing goes in this market. So just as an example, at the money right now is at 680. The last trade here, and maybe I won't go with volume today. We did see, volume today on the traded months, 25.7% implied volatility. We see about 27% implied volatility here. That has grown from 25, 26 as the market was kind of leveling off. So sometimes it is advantageous to kind of get in on some of these risk management strategies before you see the major volatility, because what happens once you start seeing the market fluctuate around a lot is that implied volatility grows, and that means the pricing grows for these products as well. As you can see here, the open interest is kind of stacked on the put side at 670 in the November canola, so about $10 below where the current market is at. But there's also a good amount of volume here at the 660 where we saw trade today, and at the 650 if you really want just kind of disaster insurance. And there's even some volume out to the 640 and the 630, or some open interest out to the 640 and the 630, and tiny bits of volume traded on that today. Today on the call side, we didn't see much in the form of volume, but we did see some trade at the 700 level. Again, we're kind of the deltas are kind of getting low, 45. I mean, it's okay being $20 out of the money, I suppose. But again, 27% implied volatility. We are seeing those grow. That's not to say that's a bad decision to get into them, particularly if you feel you've missed the boat on marketing already and you want to make sure that you lock in some floor pricing strategies. Again, we always tell our customers you don't have to hold your risk management strategies until expiry. In fact, we often advocate for exiting them before, so that you can still get some of that time value back once a more definitive directional bias on the market, I'll say. Okay, moving on to December soy oil. We saw a little bit of a rebound, but again, it did punch to a new low and down to the 100-day moving average before recovering. Still looking a little bearish here on the DEES bean oil. I did kind of move my analysis to the DEES. It's not the most liquid contract yet. That still lies in the July, but it will be very, very close. In fact, by the end of this week, we might actually see the open interest in December overtake the open interest in July. And remember, there are other months in between as well, September and November. So, but after July, we generally see December trade as the more interested month, so to speak. Moving on to palm oil. Palm oil is actually kind of interesting. It's kind of been eking out. I know the candle here looks red on today's, but we did actually eke out a gain from yesterday's close. So technically it is a gain today. As you can see, this market has moved up to test the 50-day moving average and failed, but we have some short-term momentum that's carrying it higher. So that's something that could be helping out canola. Crude oil, we did see a bit of a jump today as well, as there continues to be some uncertainty around the production increases. There's a bit of a dichotomy between the opinion of Saudi Arabia and Russia. And so that's causing some uncertainty in the market, which is, kind of cause a little bit of uptick in the crude oil market this morning. All right, on the other side of that teeter-totter, on the bear side of the teeter-totter today, we saw Minneapolis wheat, or we saw all the wheat complex, but Minneapolis wheat was the one who took the biggest hit, down about 1.3 or 1.4%, I think. You can see yesterday's action kind of pushed July Minneapolis wheat up to about 635, backed off intraday, and then faded out today. So that kind of test of the 200-day kind of failed. So we're going to have to see if that failure is going to continue, or if it can still punch higher. I think the rainfall in the northern part of the prairies, the U.S. prairies, did kind of put a damper on the rally here. So we'll have to see if it goes back and tests that 20-day moving average where we had some consolidation, in the mid to late May area, or if it'll continue to punch higher. The winter wheat classes are still a little bit neutral. I only put Kansas up here because Chicago looks very similar here, but we did see that action yesterday. Again, move up, punch test the 50-day moving average and fail. And today was kind of more a neutral day, but it did kind of test the 20-day again, but it has been trading around the 20-day moving average anyway. All right, that is what we have for you today. Thank you for tuning in. We will be with you again tomorrow. Have a great day, and we'll see you again tomorrow.